always works the same. People who are doing something keep doing more and more of it. They lose a little of their grounding in terms of the amount of risk that they're taking.
Because the rewards on offer from hedge funds and private equity firms were so huge, the big banks saw much of their talent defect to them. So the banks too had to offer their more financially creative employees the opportunity to pocket around 20% of the gains. Individual bankers now had the opportunity to play the greed game with their organisation's money.
It's particularly awe-inspiring when you get back to this central point that the main things which have driven people's ability to earn that remuneration, not every single case, but the majority of cases have been two things: a bull market and access to the bank's capital. It's not their own money they're risking.
What's the sort of minimum, do you think, in the last 2 or 3 years that a fairly mediocre, middle-ranking trader or investment banker at one of the bigger houses would have expected to take home?
You're probably talking about $1 million bonus in those circumstances.
And how high does it go?
There isn't any limit.
And as the greed game intensified, other professionals joined in. They were eager to facilitate the deals which would reward them, rather than ask awkward questions about all that debt that was being heaped on the system.
Everybody else joined in. The investment banks who are selling companies, the accountants who are increasingly doing less and less work to make deals happen quicker and easier, the lawyers who are finding their ways through difficulties by pretending they weren't there. Everybody contributed. It was a big bubble. And people made a lot of money out of doing as many deals and as big a deal as quickly as they could.
If you were a Wall Street investment banker making $3 million a year, you were on top of the world. You were the master of the universe. Suddenly, that banker making $3 million is looking at the hedge fund guy who he used to work with making $3 billion or maybe $1 billion a year. So it's created this big class warfare and envy between what I call the haves and the have-mores.
Many of the have-mores feel a visceral desire to prove their superiority over the mere haves. So there's quite an industry catering to their needs for those little extras. Meet Charlie, who provides what they want, however eccentric. Do people typically use you for stuff they want for themselves or as a present?
Oh, it varies. One of the members, for his little son, asked for one of the Premiership footballers to play with his son in his back garden, which...
You were able to arrange that?
We were able to arrange that.
A specific Premiership footballer?
Yes.
And you were able to arrange that?
We were able to arrange that. It was beautiful. Are you looking more for brown or black?
There's no price on it, which is plainly the sign of a good bag. What are you thinking of?
That's £8,500.
I would have thought on my BBC salary that's more than affordable.
We now have requests of submarines.
No, really?
Yeah, so they have their own submarines made. You can speak to someone and create your own submarine, which is definitely unique and different.
Yeah, unique and different. I think I'd probably find myself feeling a bit claustrophobic
Definitely.
in there,
Couldn't sunbathe, could you? One of our members called last week asking for a jet fighter for her garden.
Well, she wanted a jet fighter just in her garden?
In her garden.
As an ornament?
Yes, that's all she wanted.
Why?
I don't know why. We don't ask. We just say, of course, madam.
We have to come up with more and more extraordinary experiences, whether it be living with a tribe in the Sahara for 6 weeks, to challenge yourself and your mental state, through to, climbing Everest. We have a Valentine's Day extreme event where you can have supper with your wife or your husband on an iceberg up in the Arctic.
To walk onto boats that are, and boats probably isn't a great description of them, vessels, that are larger than most homes that I've been into, that are 200 feet long, that can only go into limited ports because only so many ports can handle them. But to walk into staterooms that frankly you would think you were in the Palace of Versailles or Buckingham Palace or the White House, it is pretty amazing. And every time I walk onto one of these boats and have the opportunity to tour them, it continues to take my breath away.
With such a boom in full swing by 2006, it looked like nothing could stand in the way of the players in the greed game. And yet the very methods they used to make all that money contained flaws that would topple them, derail the world's biggest economy, and cause mayhem for the banks on which we all depend. Low interest rates didn't just make it cheap to borrow, they gave little incentive to save. And this had significant consequences for the banks, which needed to raise money to meet the inexhaustible appetite for loans.
The first thing is that we had a significant decline in savings rates. So the deposits fell. The banks could not necessarily provide all the funding for the products they got demand for simply from deposits. So they had to look for other forms of funding. And one of the forms of funding was to repackage some of the assets they have, sell them onto the market, get cash for that because they're transferring the assets away. And in this way, they have now more cash and they can start lending again.
So in America, Wall Street banks started by selling good quality loans to raise money and then looked at what else could be sold.
There was this machine that Wall Street created which was really remarkable. And they kept on pressing this technology to the point where they said, well, prime mortgages work. How about we expand this technology to include less creditworthy home buyers?
With no income verification, no bank statements, and no tax returns needed. And with this no documentation loan, Greenlight Financial Services gives you the choice.
Individuals, often those with the worst of credit histories, were given the opportunity to borrow to own that cherished home. They were known as subprime borrowers, and there were truly frantic attempts to lend to them.
The ads would be, literally, just released from prison, never had a job, can't document that you are even a citizen. Please come down. We would like to make a mortgage for you.
In Cleveland, Ohio, the mortgage brokers wouldn't let any opportunity to earn a commission slip away.
They came out to my job. It was a snowy day, and I was told if I wanted the house, I had to sign then there on the spot. So I just signed hurriedly. I was looking for a place for my children and myself, and it was like either you sign or you don't have a home. So I just signed.
My Heavenly Father, God.
The mortgage brokers which supplied subprime loans to the likes of Eleanor Hall didn't keep those loans on their books. The capital for those loans came from banks on Wall Street, and after the loans had been made, they were sold by the banks at a profit to investors who might be thousands of miles away in Europe or Asia.
The new model says I make the loan, I package it up, I sell it on to somebody else, it's gone as quickly as possible, and there is no ongoing or continuing involvement or relationship or responsibility on behalf of the lending bank.
Every time a mortgage was given, the broker took a commission. Every time those mortgage loans were sold on by the banks that extended the credit, the banks booked a profit. And because the banks had sold the risk of that loan going bad to someone else, there was little proper incentive to impose proper checks that the borrowers really had the means to repay their debts.
Subprime, you go from 4 times income to 8 times income. You go from checking the incomes to not checking the income, from doing proper valuations to using Google Earth and postcodes to value houses, which was done. So everything was driven far too far.
Do you own a house? Are you looking for lower mortgage payments?
Yeah, who can help me with that? Cal can.
There was a torrent of cash for subprime loans thanks to a banking breakthrough called structured finance, which turned risky loans into supposedly safe investments. This is how it works. Here are 3 risky subprime borrowers. And over here are 3 investors who buy investments created from their mortgages. One investor loves risk, One likes a bit of risk and another hates taking risks and wouldn't normally lend to a subprime borrower.